Mark, tariffs, why do I need to worry about them? They're not having much of an effect, nothing to see in the inflation numbers, nothing to see really in terms of the NFIB number as well.
Good morning, Guy. I know you're being slightly flippant, but it is actually the right attitude to have right now. The NFIB returned the kind of results that at the moment it seems that the fiscal tailwind is dominating the fact of tariff concerns. And that is very different from 6 months ago. And that was a real positive data point that certainly I myself missed until only a couple of hours ago because we were all so focused on the CPI print. And I think that's kind of a story we've talked about the last couple of months that, you know, if you'd asked me back in February, I thought that we're going to be trading the tariff story aggressively and negatively by sometime maybe around May. We didn't know the exact month, but we thought that was the kind of timing. And we thought it was a binary timing issue. One of the things that we learned is with the stop-start tariff process and the amount of uncertainty around it is that it's not going to be a binary timing point. It's going to be kind of slowly drawn out. And companies, second of all, this is maybe the second point B, companies are going to delay reacting to tariffs as long as possible because of all the kind of changes of policy so far. It is not advantageous to react quickly and then find they didn't need to. So at all levels, people are going to delay. And the third point is they've been able to front run these tariffs. So therefore, businesses have more room to delay. So tariffs really are a slow moving story. We're starting to see the impact, but they're not a major negative yet and may not be a major negative until fourth quarter at least. In fact, I wrote a piece saying fourth quarter recently, and people said it may even be first quarter when we see that impact, though everyone agreed it will ultimately be an impact and a negative one on the US consumer and the US economy. But right now, tariffs don't matter. We've got a tailwind on the fiscal side, and we had an inline inflation print. We've got the scary catalysts out of the way, so stocks are booming in the short term.
Scary catalyst out of the way. I think the VIX is reflecting that also. It's at year-to-date lows on the VIX. We saw a big drop in vol yesterday across assets. Do you think all of that is warranted given yesterday's inflation print?
If you'd given me the full set of news flow yesterday, including the CPI print, including that the budget deficit would widen unexpectedly, including that we'd quash hopes of an imminent US-China deal, we'd quash hopes of an imminent Russia-Ukraine truce, it seemed like such a negative news flow. I wouldn't have predicted the euphoria we're seeing in global stocks. So I spent the morning kind of casting around, what did I miss? The NFIB survey that Guy pointed out was one of those things. I think the collapse, though, in vol is really, really deeply relevant. And maybe I was underestimating the impact of that. We're not expecting a negative catalyst for a while. Given what we've seen from AI so far, NVIDIA earnings are unlikely to derail us. Jackson Hole is unlikely to derail us because Powell is being undermined. He no longer can sway policy as easily. So we don't really have any scary catalysts on the horizon until September. And I should say for Russia-US peace talks about Ukraine, the expectations are already so low. So that really can't be a negative surprise either. So I think that we're probably waiting until September data now to have a real macro turning point, at least from the scheduled events. So you're either just waiting for stocks to run out of steam, or essentially the collapse in vol means this is a positive tailwind for markets.